To operate effectively in the trading environment, we need rules and boundaries to guide our behavior. It is a simple fact of trading that the potential exists to do enormous damage to ourselves. Damage that can be way out of proportion to what we may think is possible. There are many kinds of trades in which the risk of loss is unlimited. To prevent the possibility of exposing ourselves to damage, we need to create an internal structure in the form of specialized mental discipline and a perspective that guides our behavior so that we always act in our own best interests. This structure has to exist within each of us, because unlike society, the market does not provide it. The markets provide structure in the form of behavior patterns that indicate when an opportunity to buy or sell exists. But that's where the structure ends, with a simple indication. Otherwise, from each individual's perspective, there are no formalized rules to guide your behavior. There are not even any beginnings, middles, or endings as there are in virtually every other activity we participate in. This is an extremely important distinction with profound psychological implications. The market is like a stream that is in constant motion. It does not start, stop, or wait. Even when the markets are closed, prices are still in motion. There is no rule that the opening price on any day must be the same as the closing price the day before. Nothing we do in society properly prepares us to function effectively in such a boundaryless environment. Even gambling games have built-in structures that make them much different from trading and a lot less dangerous. For example, if we decide to play blackjack, the first thing we have to do is decide how much we are going to risk. This is a choice we are forced to make by the rules of the game. If we do not make the choice, we do not get to play. All gambling games have specified beginnings, middles, and endings based on a sequence of events that determine the outcome of the game. Once you decide you are going to participate, you cannot change your mind. You are in for the duration. That is not true of trading. In trading, prices are in constant motion. Nothing begins until you decide it should. It lasts as long as you want, and it does not end until you want it to be over. Regardless of what you may have planned or wanted to do, any number of psychological factors can come into play, causing you to become distracted, change your mind, and become scared or overconfident. In other words, causing you to behave in ways that are erratic and unintended. Because gambling games have a formal ending, they force the participant to be an active loser. If you are on a losing streak, you cannot keep on losing without making a conscious decision to do so. The end of each game causes the beginning of a new game, and you have to actively subject more of your assets to further risk by reaching into your wallet or pushing some chips to the center of the table. Trading has no formal ending. The market will not take you out of a trade. Unless you have the appropriate mental structure to end a trade in a manner that is always in your best interest, you can become a passive loser. This means that, once you are in a losing trade, you do not have to do anything to keep on losing. You do not even have to watch. You can just ignore the situation, and the market will take everything you own on more. One of the many contradictions of trading is that it offers a gift and a curse at the same time. The gift is that, perhaps for the first time in our lives, we are in complete control of everything we do. The curse is that there are no external rules or boundaries to guide or structure our behavior. The unlimited characteristics of the trading environment require that we act with some degree of restraint and self-control, at least if we want to create some measure of consistent success. The structure we need to guide our behavior has to originate in your mind, as a conscious act of free will. This is where the many problems begin. Like the willingness to create rules, I have not yet encountered a person interested in trading who didn't resist the notion of creating a set of rules. The resistance is not always overt. Quite the contrary, it is usually very subtle. We agree on the one hand that rules make sense, but we really have no intention of doing whatever is being suggested. This resistance can be intense, and it has a logical source. Most of the structure in our minds was given to us as a result of our social upbringing and based on choices made by other people. In other words, it was instilled in our minds, but did not originate in our minds. This is a very important distinction. In the process of instilling structure, many of our natural impulses to move, express, and learn about the nature of our existence through our own direct experience were denied. Many of these denied impulses were never reconciled and still exist inside of us as frustration, anger, disappointment, guilt, or even hatred. The accumulation of these negative feelings acts as a force inside our mental environment, causing us to resist anything that denies us the freedom to do and be whatever we want, when we want. The need for rules may make perfect sense, but it can be difficult to generate the motivation to create these rules when we have been trying to break free of them most of our lives. It usually takes a great deal of pain and suffering to break down the source of our resistance to establishing and abiding by a trading regime that is organized, consistent, and reflects prudent money management guidelines. Now, I am not implying that you have to reconcile all of your past frustrations and disappointments to become a successful trader, because that's not the case. And you certainly don't have to suffer. I've worked with many traders who have achieved their objectives of consistency and haven't done anything to reconcile their backlog of denied impulses. However, I am implying that you can't take for granted how much effort and focus you may have to put into building the kind of mental structure that compensates for the negative effect denied impulses can have on your ability to establish the skills that will assure your success as a trader. Second problem: failure to take responsibility. Trading can be characterized as a pure, unencumbered personal choice with an immediate outcome. Remember, nothing happens until we decide to start. It lasts as long as we want, and it does not end until we decide to stop. All of these beginnings, middles, and endings are the result of our interpretation of the information available and how we choose to act on our interpretation. Now, we may want the freedom to make choices, but that does not mean we are ready and willing to accept the responsibility for the outcomes. Traders who are not ready to accept responsibility for the outcomes of their interpretations and actions will find themselves in a dilemma. How does one participate in an activity that allows complete freedom of choice and at the same time avoid taking responsibility if the outcome of one's choices are unexpected and not to one's liking? The hard reality of trading is that, if you want to create consistency, you have to start from the premise that no matter what the outcome, you are completely responsible. This is a level of responsibility few people have aspired to before they decide to become traders. The way to avoid responsibility is to adopt a trading style that is, to all intents and purposes, random. I define random trading as poorly planned trades or trades that are not planned at all. It is an unorganized approach that takes into consideration an unlimited set of market variables, which do not allow you to find out what works on a consistent basis and what does not. Randomness is unstructured freedom without responsibility. When we trade without well-defined plans and with an unlimited set of variables, it is very easy to take credit for the trades that turn out to our liking because there was some method present. At the same time, it is very easy to avoid taking responsibility for the trades that didn't turn out the way we wanted because there's always some variable we didn't know about and therefore couldn't take into consideration beforehand. If the market's behavior were truly random, then it would be difficult if not impossible to create consistency. If it's impossible to be consistent, then we really don't have to take responsibility. The problem with this logic is that our direct experience of the markets tells us something different. The same behavior patterns present themselves over and over again. Even though the outcome of each individual pattern is random, the outcome of a series of patterns is consistent, statistically reliable. This is a paradox, but one that is easily resolved with a disciplined, organized, and consistent approach. There is something else about the nature of trading that makes it easy to escape the responsibility that comes with creating structure in favor of trading randomly. It is the fact that any trade has the potential to be a winner, even a big winner. That big winning trade can come your way whether you are a great analyst or a lousy one, whether you do or do not take responsibility. It takes effort to create the kind of disciplined approach that is necessary to become a consistent winner. Nevertheless, as you can see, it is very easy to avoid this kind of mental work in favor of trading with an undisciplined, random approach. Third problem is to get addiction to random rewards. Several studies have been done on the psychological effects of random rewards on monkeys. For example, if you teach a monkey to do a task and consistently reward it every time the task is done, the monkey quickly learns to associate a specific outcome with the efforts. If you stop rewarding it for doing the task, within a very short period of time the monkey will simply stop doing the task. It will not waste its energy doing something that it has now learned it won't be rewarded for. However, the monkey's response to being cut off from the reward is very different if you start out on a purely random schedule, instead of a consistent one. When you stop offering the reward, there's no way the monkey can know that it will never be rewarded again for doing that task. Every time it was rewarded in the past, the reward came as a surprise. As a result, from the monkey's perspective, there's no reason to quit doing the task. The monkey keeps on doing the task, even without being rewarded for doing it. Some will continue indefinitely. I'm not sure why we're susceptible to becoming addicted to random rewards. If I had to guess, I would say that it probably has something to do with the euphoria-inducing chemicals that are released in our brains when we experience an unexpected, pleasant surprise. If a reward is random, we never know for sure if and when we might receive it, so expending energy and resources in the hope of experiencing that wonderful feeling of surprise again isn't difficult. In fact, for many people it can be very addicting. On the other hand, when we expect a particular outcome and it does not come about, we are disappointed and feel bad. If we do it again and get the same disappointing outcome, it is not likely that we will keep doing something we know will cause us emotional pain. The problem with any addiction is that it leaves us in a state of choicelessness. To whatever degree the addiction dominates our state of mind, to that same degree our focus and efforts will be geared toward fulfilling the object of that addiction. Other possibilities that exist in any given moment to fulfill other needs, like the need to trust ourselves and not to subject too many of our assets to risk, are either ignored or dismissed. We feel powerless to act in any other way than to satisfy the addiction. An addiction to random rewards is particularly troublesome for traders, because it is another source of resistance to creating the kind of mental structure that produces consistency. 4th problem is external versus internal control. Our upbringing has programmed us to function in a social environment, which means we have acquired certain thinking strategies for fulfilling our needs, wants, and desires that are geared toward social interaction. Not only have we learned to depend on each other to fulfill the needs, wants, and desires we cannot fulfill completely on our own, but also in the process, we have acquired many socially based controlling and manipulating techniques for assuring that other people behave in a manner that is consistent with what we want. The markets may seem like a social endeavor because there are so many people involved, but they are not. If, in today's modern society, we have learned to depend on each other to fulfill basic needs, then the market environment, even though it exists in the midst of modern society, can be characterized as a psychological wilderness, where it is truly every man or woman for himself or herself. Not only can we not depend on the market to do anything for us, but also it is extremely difficult, if not impossible, to manipulate or control anything that the market does. Now, if we have become effective at fulfilling our needs, wants, and desires by learning how to control and manipulate our environment, but suddenly find ourselves, as traders, in an environment that does not know, care, or respond to anything that is important to us, where does that leave us? You are right if you set up the proverbial creek without a paddle. One of the principal reasons so many successful people have failed miserably at trading is that their success is partly attributable to their superior ability to manipulate and control the social environment to respond to what they want. To some degree, all of us have learned or developed techniques to make the external environment conform to our mental interior environment. The problem is that none of these techniques works with the market. The market does not respond to control and manipulation unless you are a very large trader. However, we can control our perception and interpretation of market information, as well as our own behavior. Instead of controlling our surroundings so they conform to our idea of the way things should be, we can learn to control ourselves. Then we can perceive information from the most objective perspective possible, and structure our mental environment so that we always behave in a manner that is in our own best interest.